Hi everyone, thank you for joining us on this special edition of LifeFWD. I'm Raja Khouri, VP of Business Development, Segregated Funds and Annuities. Today my special guest is Sadiq Adatia. Sadiq is a Chief Investment Officer with BMO Global Asset Management. He and his team manage $225 billion of assets under management. Please help me welcome Sadiq in the studio.
Raja, how's it going?
Welcome Sadiq.
Thank you
for joining me. Thanks for joining us on this LifeFWD short. If I can level set by asking you a high-level question, what are right now your thoughts given the current global market?
Well, there's lots to talk about there for sure. But let's start off with kind of at the beginning of the year. Looking into what we were looking at markets, we were expecting some turbulence with the tariff situation. We were expecting to see some volatility in the markets on its own. But of course, more importantly, we were trying to understand where the markets would go. So as we look ahead now, and we've got some answers on the tariff front. We've seen some good earnings results coming through. To us, the outlook actually looks relatively good. And it's not because we don't think there's going to be some shocks here or there, but generally consumers around the world continue to be spending. Earnings continue to look relatively good. And for the most part, we're not seeing anything that might actually disrupt the markets more globally. And that's generally a good thing.
When I think about volatility specifically, you talked about the global markets, but if I think about are there some ways or some of the tools that your team manage downside protection given sort of the current environment that we're in?
Yeah, risk management is a very important part of everything we do. So when we think about, what could go wrong, those are important things. So again, go back at the beginning of the year, 3 things we highlighted potentially could go wrong. The Trump uncertainty not being priced in, interest rate cuts maybe not happening as fast as people were expecting, and geopolitical risks. I would say for the most part, all 3 actually occurred. So how we protected against that one is having some gold in our portfolios, a very good hedge against uncertainty and volatility. Second, we utilize some options in our portfolios to help manage the downside risks by paying a little bit of a premium. Think of it as insurance against what might go on. And third is, as we look at our portfolios, we want to make sure we're diversified. And diversified across geographies, sectors, but also managing the currency risk. And as we saw in the first half of the year, we did see the Canadian dollar appreciate against the US dollar, which from a Canadian perspective is good. However, investing in US markets, not necessarily as good. I'll use oil as a good example. We've seen a lot of volatility in the oil market. What we've done is making sure that we're always watching the fundamentals on oil, so supply and demand, paying attention to what may be going on in the OPEC market, but also having people outside BMO GAM coming in and giving us their perspectives on the bullish side and the bearish side. And because we have a big group of people, we've got all these different perspectives coming in. So when we make a decision on something, we can stay by it, but we also understand what will cause us to get out of that position.
Canada is seen sort of as let's call it relatively a small player on the global stage from an investment standpoint. What is your neutral weight when it comes to Canada versus international equities or US?
Yeah, so if we take our equity portion and we divide it between countries, normally we end up somewhere between, let's say it's a 60 equity portfolio, 40% of that, 30 to 40% of that would be to the US, and the rest would be split evenly between Canada and international markets. We are Canadians, and we do have a tie to our Canadian economy. So if we stuck with the 3 or 4% weight to Canada, we really wouldn't be aligned to kind of how we live and spend our money. So 15% gives us that exposure and diversification, but also allows us to participate if we do have diversity away from US and international markets as well.
Can you walk me through your team a little bit, specifically the multi-asset solutions team? I know they use this 5-lens approach. Maybe for our audience, our advisors, if you can walk us through that a little bit.
Yeah, this is actually a big core of what we do. The multi-asset solutions team is 15 individuals, and given that they're all looking at it from a different perspective, economic data, technical analysis, and again, fundamentals, they're coming around at ideas of the markets in different ways. And so our 5 lenses, which if I can explain in a short way, is lens 1 is how we think about markets from a risk-on or risk-off perspective. So it's how do we want to allocate between equities, bonds, and cash. Lens 2, we get into the equity market. So geographically, where do we want to invest? Canada, US, international, emerging markets. Lens 3, we get into the bond components. do we want to be in treasury, or do we want to be high yield, emerging market debt, investment grade, duration? Lens 4 gets into the style and factor exposures, value growth, quality, momentum. And then Lens 5 is our implementation. What do we want to do on the currency front and on the commodities side with gold and sectors as well too. So that's a very rigorous process where we walk through each of those to see where can we add value and tilt our portfolios accordingly. Everybody within that multi-asset solutions team inputs into that. The team manages about $80 billion of assets. So very much in tune of what's going on with markets. And again, very much tied with what clients are expecting out of us. It's a very important part of how we manage portfolios and the guidance to all of the multi-asset team, but also the broader investment team as to what our outlook looks like. And that's refreshed on a monthly basis.
I know that BMO recently has made some significant investment when it comes to the global equity team. Can you walk me through a little bit as to what the team does and some of the products that they manage?
Yeah, this is a great story. About 3 years ago, we brought on this global equity team. At the time, it was about 14 individuals. We've now grown that to about 20 individuals on the team. They're different than what you would typically see in a global equity fund. And the reason is that as opposed to having just one portfolio manager managing global equities and then just research analysts underneath it, it is created with 8 PMs. Each PM covers a sector or two, so sector specific, but covers it on a global basis. And so each of them have their best ideas, and you put that together, you end up with a 60 to 75 stock portfolio of best ideas. But each sector can play in a theme that is prevalent in that actual sector. And then on top of that, multi-asset solutions team plays a role in that because they provide the macro sides of things. So whether it's geopolitical risks or it's something to tie with what's going on with interest rates, that helps tilt the portfolios in a certain direction on sectors. So that way you've got the best stock ideas tilted in the right direction based on the macro views, and you put that together and you have a really good outcome coming through. The portfolios have done exceptionally well in the last few years, and so really excited about how that looks going forward as well.
A bit of a curveball question, if I may. What keeps you up at night?
Oh, this is a great question. As I said, beginning of the year is the Trump uncertainty, what is going on in his head at any point in time. Interest rates, I still think, are going to be not as easy as people expect. I know a lot of people are expecting a September rate cut. We'll see if that actually plays out. And then third is just this geopolitical risks. We've been in a tension with the tariff situation that maybe in the short term doesn't cause as much angst, causes a bit of volatility, but maybe doesn't change earnings dramatically. But over the long term, how this tariff conversation has gone can potentially create a real change in the global marketplace. Does the global landscape change because of what has been going on in 2025? And the answer is probably yes, but how much it changed we'll only gradually know over time as companies adapt and change how they look at their future.
Well, thank you so much for joining us in the studio, Sadiq. I thoroughly enjoyed our conversation, and always good to hear from you and your insight.
Well, I really appreciate it. Thanks for having me. Anytime.
Thank you all for joining us here today. Look out for our next Life Forward series where we focus on women in finance.